Hey everyone, and welcome back to the channel. Today, I'm finally pulling back the curtain on the trading setup that has consistently been my most profitable in the Forex market. This isn't just a quick tip or a partial strategy. I'm revealing it in full detail, just as I use it. We're going to break down every component, why it works, and how you can start implementing it yourself. First off, let's talk about the foundation of this setup, which is price action. I rely heavily on understanding the story that the candles are telling us. We're looking for specific patterns that indicate a high probability of movement in a certain direction. This often involves looking for bullish or bearish engulfing patterns, pin bars, or doji candles at key support and resistance levels. These are not just random occurrences. They are signals that the market is potentially reversing or continuing a trend. Next, we layer on a couple of simple, yet powerful, indicators. The first is the exponential moving average, or EMA. I typically use the 50 EMA and the 200 EMA. These are not just lines on a chart, they act as dynamic support and resistance levels, and they also help us identify the overall trend. When the 50 EMA is above the 200 EMA, it generally signals an uptrend, and vice versa for a downtrend. The second indicator is the Relative Strength Index, or RSI. I use the standard 14-period RSI. This oscillator helps us gauge the momentum of the price. We're looking for overbought conditions, typically above 70, and oversold conditions, typically below 30. However, the real power comes when we look for divergences between the price action and the RSI. For example, if price is making higher highs, but the RSI is making lower highs, that's a bearish divergence, a strong signal that the trend might be weakening. Now, let's put it all together into the actual setup. We're primarily looking for trades in the direction of the overall trend, as indicated by the EMAs. So, if the 50 EMA is above the 200 EMA, we are only looking for long opportunities. We then wait for price action to pull back towards a key support level, which could be a previous resistance turn support, or even the 50 EMA itself. At this pullback point, we are looking for a specific price action signal. This could be a bullish engulfing candle, a hammer, or a strong bullish pin bar. Simultaneously, we want to check the RSI. Ideally, the RSI should be coming out of oversold territory, or showing bullish divergence. If all these conditions align, trend is up, price pulls back to a key level or EMA, we see a bullish reversal candlestick pattern, and the RSI confirms, with either an exit from oversold or divergence. That's when we enter a long position. For short positions, the criteria are mirrored. We look for a downtrend 50 EMA below 200,